Look, most business owners are financing vehicles the wrong way, and it's costing them thousands in hidden fees, credit damage, and liability exposure that they don't even know about. But look, here's the thing. Today, I'm going to show you exactly how to get business financing for vehicles with no personal guarantee so you can keep your personal credit clean and you can build unstoppable business credit at exactly the same time. Hey, I'm Crandall, CEO at Credit Suite, and I'm going to walk you through this framework step by step so you know exactly what to do. So here's what I've noticed over the last matter of years, right? Working with thousands of different business owners, the ones who finance vehicles the right way, well, they ended up with just stronger business credit profiles. They got lower rates, they get better future loans, and they actually get way more funding options down the road as well. But the ones who don't, well, then they get stuck. They can't scale. They're constantly fighting the financing game, right? You don't want to be on the wrong side of that one. So by the end of this training, you're going to understand exactly which lenders offer no personal guarantee financing. You're going to know what you actually need to know to qualify and the fastest path to building real business credit through vehicles. So we got a lot to cover today, so let's dive in. All right, so here's the biggest mistake I see, and I want to decode this for you right now. Most business owners title their vehicles in their personal name, right? They think it's faster, but the reality is it's not. It's not faster, and they think it's easier, but it's not easier either. So look, maybe their business credit isn't built yet, so they assume that they have no choice. But here's what actually happens. When you do that, and this is very, very, very important to know, first, you expose your personal assets to business risk. That's something you don't want to do and you don't have to do. Think about it. If that vehicle's in your personal name and someone gets hurt during, let's say, a service call or there's an accident while you're on the job, then your personal assets actually become vulnerable. Your house does, your savings accounts do, your stocks, your bonds, all those things you're putting on the line. And that's not what you really want, right? That's real liability. That's real exposure that you don't actually need to have. But when you title it in the business name, well, it's protected. The liability stays with the business. That's literally what business entities are designed for. And that's the whole point, right? To protect our personal assets, to make it easier for us to get financing. Now, the thing to keep in mind is that you miss out on commercial insurance coverage when you're putting it in your personal name. Well, personal auto insurance has limits. Business coverage is built for what you're actually really doing with the vehicle, from hauling equipment to sending crews to job sites to many other purposes, right? You get higher liability limits, you get broader protection, and if you've built strong business credit, you can unlock even lower rates on that insurance. And that's the difference between being insured and being really insured. Another thing to keep in mind, this is huge. So pay attention. You're not building business credit when you're putting it in your personal name. Look, when you finance in your personal name, that loan never touches your business credit file. It won't show up with Dun & Bradstreet, with Experian Business. It won't show up with Equifax Business either, right? That means you're missing a chance to build business credit and you're giving up access to better funding in the future. You don't want to do that, right? But here's the thing. And this is where it really gets powerful. When you finance a vehicle in your business name with a lender that reports to the business credit reporting agencies, then every single payment you make actually helps build your business credit profile. So just make sure the lender actually reports. Not all of them do. Like over 90% of lenders don't even report to the business credit reporting agency. And fourth of my points, you're destroying your personal credit capacity when you're not putting vehicles in your business name. Look, that vehicle loan, well, it's in your name. It counts against your personal debt to income ratio. So when you want to get a mortgage next or like any other kind of loan or a business line of credit where you need your personal credit, then the problem is that vehicle payment just reduces how much you can actually borrow. And that's a true cost because it costs you access to the money that you really need. But if it's financed through the business, well, then your personal debt to income ratio, it stays clean, right? Your personal credit score isn't affected at all. You keep flexibility for the personal loans and the actual things you're going to need your personal credit for, even the larger business loans. You see the difference? And fifth, there are real tax advantages that you're leaving on the table if you're financing vehicles in your personal name. Look, Section 179 deductions, depreciation, schedules, mileage deductions, all these things come into play. These strategies exist, but your CPA can only use them if the vehicle is titled in the business name. So check with your accountant, but the math usually works out in your favor, and that's real savings. That's real money. And finally, this is where momentum kicks in and growth starts to snowball. Your first vehicle, well, that's tough, right? Your second, it's easier. Your third, lenders now know that you actually have a history of paying your bills. So you get better interest rates, longer terms, the approvals are faster, but only when these things are showing up on your business credit report. You're establishing business credit history. And that's why you finance and how you finance matters. It's not just about getting a vehicle. It's about building a business foundation, especially a credit profile foundation, right? So here's the reality, and I want to break this down for you. There are two ways to finance a business vehicle. Both build business credit, right? So both can help you. The difference is whether the lender checks your personal credit or it actually doesn't. So let me start with path one, with a personal guarantee. Now, this is how many business owners begin, and that's perfectly fine if you want to start here. So a personal guarantee means that you are saying that if my business can't pay, I will. So the lender reviews your personal credit profile. They often want to make a decision based on your personal credit. They want 650, 680 scores or higher. So here's something that a lot of people don't realize. Even though you personally guarantee that loan, okay, it doesn't always show on your personal credit report. Often only the credit inquiry does, depending on the type of lender that you're getting it for, if the vehicle is for business purposes. Now, the key is whether the lender reports the account under your business, if it's set up properly under the business entity, and it reports to a business bureau. Well, then in that case, those one-time payments build your business credit profile. And that's leverage. Because what's happening here is we're putting this large loan on our credit profile, and then we're building business credit while our personal credit stays separate, right? So you'll typically need a personal guarantee in this type of scenario if you've been in business less than 1 year. If your annual revenue is low or it's inconsistent, especially if you don't have a business credit profile and score established, or you're not set up with Dun & Bradstreet, you don't have a DUNS number, for example, or your business credit is there's nothing on there. It might not even exist, or it might have only a few accounts. In that case, you might have to provide a personal guarantee. So let's talk about path two, where you can get auto financing without a personal guarantee. Now, this requires no personal credit check, no personal liability, no personal guarantee. The lender actually looks purely at your business credit profile for the approval. So to qualify, you generally need a strong business credit profile and score with D&B, Equifax, and or Experian. You need trade lines reporting, 10 trade lines on your business credit reports from vendors or retailers or whoever they're from. You need about at least 1 year of business credit history to be able to get approved in many cases with auto lenders. And you need at least 1 year in business. Not a lot, right? But if you have that, chances are good you can get approved. They're also going to want documented and consistent business revenue. Sometimes they don't look at it. Sometimes they want to see tax returns, P&Ls, or bank statements. And this is the sweet spot, right? Because once you hit these numbers, then financing becomes predictable. You get better rates. You get competitive, right? You're in control. No more begging for approvals because they're based on your business credit quality. So let me show you which lenders actually offer this no PG kind of credit, because this is where it gets real, right? Ally Bank is my favorite. They offer a business name only option. So they actually work with major vehicle manufacturers, but here's the key. You can't always apply straight online. Oftentimes, you'll need to go through an authorized dealer that deals with Ally Bank. Now, GM Financial, another favorite, right? They have a program called Business Choice, which is has similar requirements, but sometimes it's a bit more flexible for first-time business owners. And then you can also look at Ford credit if you like Ford, right? So it's strong for trades like construction, landscaping, or any business using work trucks and vans, especially if you're scaling up. Another is Chrysler Capital, Toyota Financial Services, Honda Financial Services. Nearly every major manufacturer now has a commercial financing division. So you've got options. You're not stuck with just one lender. It depends on the brand that you want to buy. The key is knowing which one to approach and when. And that's the strategy. So now here's a real question. What if you don't hit all those requirements? Those requirements that we went through. Well, don't stop. Don't get discouraged. There are compensating factors that can actually bridge that gap. So let me show you how to actually bridge that gap with compensating factors. First, put more money down. Instead of 10%, go to 15 or 20% down. That lender actually has reduced risk, and that improves your overall approval odds and usually gets you better terms. Now, secondly, you could show strong and consistent revenue. You could do a full doc verification loan. And if your business bank account shows steady deposits and good cash flow, then lenders take notice of that. They can also often offset a thinner business credit profile. Another compensating factor is start smaller. So begin with like a $25,000 or $35,000 vehicle and build a 12 to 18 month history, and then go to the $50,000, $60,000 vehicle. So when lenders see the track record of financing other kind of vehicles, especially on your business credit, that momentum builds. Now, a fourth is leveraging your existing banking relationship. So if you already have a business checking account or a business line of credit with a bank, that relationship matters, right? Lenders trust clients they've already worked with. And that trust can be like a tiebreaker to actually be able to help you get approved. So under 1 year in business, well, then you may need a personal guarantee or like higher down payment. But remember, this is the step one of the journey, not where you're actually stuck forever. It's just establishing yourself so you can get more credit and better financing down the road. All right, so let's talk logistics. Before you even apply, you need to get organized. And this is very, very important. You're going to need business information. They're going to ask for like documents like your articles of incorporation. You need to go into the dealership with those, like LLC agreement, whatever you have. They're going to want that EIN letter from the IRS as well. And make sure that your address matches your business that's on those documents. They're going to want 3 months worth of business bank statements. Okay. If you're new in business, they may want personal bank statements. They're going to want a detailed quote from the dealer, whatever the lender that you're dealing with. They're going to want to know like the vehicle you're buying, the model, the VIN, all that kind of stuff, the pricing. They're going to want a copy of your business credit report. They'll typically pull that themselves and your personal credit report, so you don't have to worry about that. But they will typically pull your business credit report, and sometimes they'll get your personal if you authorize them to do so. Now, once you have those, the process becomes straightforward, and here's exactly step-by-step how it works. First of all, go to the manufacturer's website, find the commercial financing section, use the dealer locator, contact the dealer's business finance department directly, not just the sales desk. They'll walk you through the exact requirements. You want to bring everything we talked about prepared. So 1 visit, not 2, right? Lenders move fast when you're organized, and here's what happens if you are and you walk in there. Your first vehicle, well, that sets the stage. It tells lenders you can handle these kind of business payments. Your business can handle those kind of payments. Now, secondly, it's much easier. You get better terms on that second kind of auto loan. Then your third, well, now you're getting premium rates because you build a trustworthy track record and you're watching your limits grow. So you go from like that first vehicle at $30K to your second to $50, $60 to third $80 to $100. We had a client get approved for $350,000 with no PG the other day. Then you're looking at fleet credit lines, equipment financing, and it becomes like a snowball effect where you can buy entire fleets of vehicles at that point. So each one-time payment improves your Paydex score, your scores with Equifax, your scores with Experian, your overall business rating. And then those scores open up doors to like larger credit lines and business credit cards and SBA loans, equipment financing, all other kind of financing as well. So you're not just financing a vehicle. You're actually building an asset that opens doors for years to come. Now, quick note on leasing versus buying, because this comes up a lot, right? Lease, if you want new vehicles every 3 to 4 years, preferably like lower payments, and maintenance is covered under leasing. So a lot of people choose leasing for that benefits, and your mileage is controlled. Like you're limited on the mileage you can actually have. Now you want to buy if you like to keep your vehicles 5 years or more. You put a lot of miles on the vehicle, or you want equity in the vehicle, or it holds good resale value in your market. Well, then you probably want to consider buying. But either way, both report or help you build business credit if you do it the right way that we talked about. And that's what's most important. So the choice depends on the business model and your cash flow and other things on whether you consider a lease versus a purchase. So here's your complete framework. Whether you start with a PG or move straight to no PG financing, either way, your business is building business credit if you do what we talked about today. You're protecting your personal credit, and you're laying the foundation for larger funding down the road. Now, most business owners don't realize how powerful this is, because 5 years from now, you're going to look back and realize the first vehicle, that finance decision was one of the best that you actually made. And that's real. So here's what to do next. First, click below, right? In the description, I actually put a link there, and you can download my free step-by-step business credit building guide. It walks you through like how to build business credit, helps you prioritize the steps, and helps you move to no personal guarantee credit super quick. Now, second, check your DMV credit profiles if you don't have one. So you can actually create one today if you don't have one. And if you do think you have one, then check your DMV profiles. And if you then pull your latest report, like know exactly where you are now. It's a good starting point. And if you want a free Dun & Bradstreet credit report score, plus like an actual live review with the funding expert, then you can actually click the link in the description below and we can get you that as well, because we have access to a lot of cool free D&B reports and scores for you. And third, make the call. Contact the dealer's business finance department. Ask the right questions. See what you qualify for right now, because you might be closer than you even think that you are. Hey, once again, Ty Crandall here. Thanks for watching. Let's build your business credit the right way.